Now, the SOC reports I mentioned earlier in the lesson, we've got these systems and organization controls reports. These are, you could think of just separate from an audit. I mean, sort of, but they're different types of engagements. We could hire someone to do a SOC 1 report, SOC 2 report, and we have SOC 1 and 2 reports, and each of these reports have a type 1 and type 2. That can be confusing. Let's take it all with a grain of salt, step by step. These different types of reports are regarding system level controls. So we're still in the realm of integrated audits, we're still in the realm of internal controls, and this auditor can provide these reports, and we're going to see what's the difference between them, what do you need to do for each engagement type. SOC 1 and SOC 2, one provides assurance, one does not. We'll see that. While there's an audit team for many public companies, large audit firms will have a SOC 1 team working alongside the audit team. This is something I experienced my time in public accounting. I was on the normal audit team. They were on the weird one. They weren't the weird ones. We were on the financial statement audit, right? It's financial statements right here. And we're focused on the numbers, not particularly the internal controls. But you've also got the SOC 1 team. And it's just like I was a staff accountant, senior accountant, we had managers, we had everyone. You have the same thing here. You have managers, staff accountants, everyone there. Except what they're doing is focusing on auditing those internal controls. They're testing internal controls. And with SOC 1 and SOC 2, again, we'll see those differences in a second. These work in conjunction with each other. We relied on SOC 1 information, and they worked with us. We had two different goals. This is very common. Now, there are regulations on whether they're necessary or not. Don't worry about that for the exam here. Just know that this happens a lot, and it is a good, solid way to make sure your company is operating properly. If you're a massive company with a lot of money, if you're going to get an audit, it's like, okay, might as well just get a SOC 1 report issued. It's going to help the audit, actually, as we will see. Think of this SOC 1 team as kind of an audit of the internal controls. You're not doing an integrated audit here, but you're getting a report on your internal controls, which can be used by investors, creditors, banks, anyone. The purpose of the SOC 1 team is to provide an independent assessment of the controls over financial reporting of a public company. The team is responsible for evaluating the design and effectiveness of the controls and providing recommendations to improve the controls. The team also provides assurance that the controls are operating effectively and that the financial statements are free from material mistakes. Now, it sounds pretty similar to what we've been seeing with integrated audit and normal audit, and that's fair. That is quite similar. The company can also decide on its own to have a SOC 1 team work with the auditor to provide the auditor with more assurance over controls, which reduces control risk and allows the auditor to reduce substantive testing. We saw that earlier in the lesson, where if the auditor wants to do less substantive testing, they could do an integrated audit, which would help them to bolster their understanding of control risk, and you do less work. If you can rely on the internal controls, you have to test the actual numbers less. Now here we're going to see some charts and graphics on our SOC reports. As mentioned, we've got SOC 1 and SOC 2, and then type 1 and type 2 for each. Our next graphic we're going to see is going to focus on the type 1 and type 2 for SOC 1. So all you need to know for SOC 2 is what you see here. We're going to dive further into SOC 1 as an introduction to what we will see quite shortly. Now, our SOC 1 report, this is going to report on internal control over financial reporting, and hence that's why we're going to go into it in more details, because that's what this is all about. And who uses that? That's going to be management, the user entity, the user auditor. SOC 2, we'll just briefly go over it. You got to know it's there, but again, we're not going to really focus on that. It reports on the security, availability, processing integrity, confidentiality, or privacy controls of an entity, and management, regulators, others use it. It's shared under an NDA. It's much more restricted in use, whereas a SOC 1 report can be utilized much more for many other purposes. As promised, here's our SOC 1, Type 1, and Type 2. Big distinctions here and big implications for what we are going to see in the audit world. Now, a Type 1 report reports on the design and implementation of controls. Just says, hey, they were designed well and they're implemented well. Type 2 takes it a step further. Type 2 says that the controls were designed well, implemented well, and they are operating effectively. So by saying this, Type 2 reports are going to require much more work, because you're providing assurance, a level of assurance over the effectiveness of how well these controls are operating. Type 1, it has its uses, it has its purpose, but it's less work. Type 2, you can use to substantiate an audit to say, this is audit evidence. We had a type 2 report done, and internal controls are looking pretty good. They're operating effectively. We're focusing on the type 1 and type 2. You need to know both of these, and you need to know that type 2 is more reliable, requires more work, and it provides a level of insurance, which has implications going forward. The type 1 opinion, we're going to see here, these are exactly how you would see it in real life, and you are going to see the differences in terms of that assurance. Now we see here, for type 1 opinion, we did not perform any procedure regarding the operating effectiveness of controls. We do not express an opinion. Super important there. For the opinion, in our opinion, in all material respects, based on the criteria, they were designed and implemented, nothing said about their operating effectiveness. Controls related to control objectives were stated suitably designed and will provide reasonable assurance if the controls operate effectively. All of this language is hinting and pointing directly towards this one important crucial difference. For the type 2 opinion, if we do the extra work and provide a type 2 opinion, fairly presents, they were designed and implemented. So it's essentially the same thing. We've got point A and point B. These say the same exact thing, designed and implemented, suitably designed, reasonable assurance if the controls operated effectively. But then we have C, the controls operated effectively. Boom, there it is. To provide reasonable assurance that the control objectives stated in the description were achieved throughout the period, whenever to whenever. Keep in mind the first 2 points are the same as type 1, as I just said. Important distinction there. Just like an audit is more in-depth than a review, type 2 is more in-depth than a type 1. Why would you not just do the type 2 then? Well, because it's going to require more work, more resources, more effort, more money. The user auditor should obtain an understanding of the nature and significance of the services provided by the service organization. We'll go into depth on service organizations later in other lessons, but essentially, a service organization could be an independent payroll processor. So it's a branch, in essence, of your company. So if you don't do your own accounting and you hire an accounting firm to do it for you, they would be a service organization. And the effect on the user entity's internal control, sufficient to identify and assess the risks of material misstatement and design and perform audit procedures responsive to those risks. What this is saying is the auditor's responsibilities within the SOC report topic. It's the auditor's responsibility to make sure that, okay, we've audited the entity, but if the entity uses, let's say, ADP to do its payroll, we would need to get a level of assurance over how ADP's internal control works. Now, in reality, how does this work? Is ADP has it's a public company, has its own audit, it has its own SOC reports, it has its own everything like that, right? Into integrated audits. So the auditor for, let's say, company ABC, and ABC uses ADP for its payroll, you can rely upon those reports that were done by another auditor. Let's talk about the auditor's responsibility in terms of these two types of reports. We talked about the purpose, we've talked about what they do, the differences, but what is the auditor's actual responsibility for these two? Now, when a SOC 1 report is available, the auditor can utilize the report. Like I said before, it provides a level of assurance, it provides some evidence towards something, so you can use it. And hopefully whoever made the report, maybe it was your own firm with a different team, or maybe it was a completely different firm, hopefully they have a good professional reputation and they have a reliable report that you can use to validate and substantiate your own audit. For the SOC 1 Type 1 report, the Type 1 report may aid the user in obtaining an understanding of controls. Big distinction, a Type 2 report provides the auditor with assurance about this. Again, a Type 1 report, it's helpful. It's not going to give you as much evidence and assurance as a Type 2, but it's helpful. However, Type 1 report is provided when tests of operating effectiveness of the internal controls were not performed, and therefore it does not provide the user auditor with a basis for reducing assessment of control risk. That's a big point there. A type 2 report can help reduce control risk. It allows for a reduction in the assessed level of control risk. Type 1 does not. So type 1 is useful. We can use it, gain an understanding. It can help us out. We can even reference it. Type 2 is actually going to have a direct effect on our audit, helping us to reduce control risk and allowing us to rely upon it because there is assurance. Alternatively, such evidence to allow reduction in assessed risk can be obtained by the user auditor. So this is just going back to testing, audit risk. If you want to reduce the assessed control risk, you just do more tests of controls. So this is like a shortcut, right? Someone else has done it before you, so you can rely upon it. But if no one else has done a type 2 before you, just do tests of controls, and you'll see that you can reduce the assessed level of control risk if there are no problems. Some type 2 criteria: when the user auditor plans to use a SOC 1 type 2 report as audit evidence, which they can totally do, but we're going to talk about reasons and ways that they would need to be able to have confidence over that. The user auditor should be satisfied regarding the competence and independence of, so the service auditor is the individual who provided the type 2 report, who did the work. The user auditor is the one using that report. The user auditor is us. We're auditing ABC company. And the service auditor is the one who just independently did this type 2 report. So their competence and independence need to be validated. We need to be satisfied regarding the adequacy of the standards under which the report was issued. Was it properly, was it done according to generally accepted auditing standards? Whether the period of time covered by the report is appropriate. So we can't use a 2015 report for a 2016 audit. It needs to cover the right time period. Whether any complementary controls are relevant in addressing risks of material misstatement in the user entity's financial statements, and if so, obtaining an understanding of the design and operating effectiveness of such controls. I didn't cover this. Time elapsed since the performance of test controls. All of these are related, these points. We want to make sure that, yes, you did a good job. The type 2 is a solid, you did it well, it followed the right standards, you were competent and independent. However, does it actually cover the material that we're auditing? That's what we're seeing here. These here, does this report cover what we actually want it to? And lastly, the evaluation of whether the tests of controls performed by the service auditor are relevant to the assertions, meaning, and we'll see this in our revenue cycle, cash cycle, expenditure cycle, the accounting assertions. Does it cover maybe the completeness assertion, but we're auditing the existence assertion? Just differences like that. Does it provide sufficient appropriate audit evidence to support the user auditor's risk assessment?
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.